Welcome to the weekly pivot for November 16th, 2025. All right, so this week we'll go through key events. We will review last week. We're going to zoom out a little bit and talk about the daily chart. We will go into some in-depth analysis on the daily chart, and then we'll go into some tactical hourly chart analysis. So, key events. Government shutdown has ended. Unfortunately, we might have another one soon if a longer-term funding bill is not passed by January 30th. So there's still a ton of uncertainty with this. And then, of course, there's a bunch of other issues that are sitting in the background. So I think that's, why things are sort of sideways right now and why the VIX is a little bit elevated. People are uncertain. So Fed speakers, bond auctions all week long. You could check your favorite economic calendar for that. Wednesday at 2 p.m., we've got the FOMC meeting minutes. Wednesday after hours, we've got the big guy, NVIDIA earnings, and that's going to be very key for the market. What happens there and what happens to NVIDIA will likely seal the fate for the market for this week. So big important event coming up this week. And then Friday at 10 a.m., we've got Michigan inflation data. With the absence of government data until it starts to come back online, traders are going to look for proxies, so that's going to be a key proxy for folks to look at. Let's talk about last week. So some stuff we got right, some stuff we got wrong, kind of sideways. We ended up closing essentially flat on the week. We got to bounce off the hourly RTH phase oscillator extreme. We had that 1348 cross, covered the daily 21. It was looking actually pretty good the first couple days. And then we failed that daily 21. And then, of course, we failed the monthly pivot at 6840. So no continuation until we can hold that. And then we did come back and test the quarterly pivot again, and that held again. So that's a good sign. So, it's definitely different than before, but I think that's just representing the uncertainty that we're seeing in the market. So before we jump into this, I have switched the format to just show a larger chart. Hopefully this will be helpful for anybody who's watching this on mobile, and you should be able to clearly see everything. I do love the side-by-side charts. For me personally, I find it's really nice to have the context. I like to look at multiple charts at the same time anyway, just to kind of see a different perspective on things. But I think for the purpose of these videos, you can always go back and forth and you can kind of look at things, take screenshots, however you'd like to do it, and then look at them side by side. But hopefully this helps anybody who has had some trouble viewing the weekly pivot over the last couple weeks and months. And if you have any comments or any feedback for me, please feel free to drop them below. So let's jump into this. We talked about this a few months back. These pullbacks to the daily 21 have been bought. And if you look back, going back to kind of the April turnaround, out of we're in the 10th pullback now, if you consider the last week's pullback, the 9th one, the 10th pullback into the daily 21 48 zone. And that's this zone here, this little blue zone that we have on our pivot ribbon. And so out of those 9 pullbacks that we've had, 9 of them have ended up resulting in some form of a bounce. And 8 of them, with the exception of last week's, have resulted in continuation higher to make new higher highs. And last week's is the first time that we failed that. And so the question is, is this going to be different? And it very well could be. But I think my point here, the real reason why I want to zoom out is buy the dip works until it doesn't. But generally, when you have a strong trending market, it's better to favor the pullbacks as potential opportunities for continuation upside until they stop working. And when they stop working, you can reevaluate. And this is where your risk management comes in. If you're putting in properly sized trades for each one of these pullbacks, right? This one's going to be a pretty big winner. This one's going to be a decent winner. This one's going to be a big winner. This one's going to be a okay winner. This one's going to be an okay winner. This one's going to be a big winner. This one's going to be an okay winner. This one was a big winner, and this was an okay winner, right? If you bought each one of those dips. Now, let's say the next one fails, right? Let's say magic number 10 ends up failing, right? And we end up breaking some of these key levels that we've talked about. We're seeing some different signs here. You can see that's the first time that we've breached the daily 48 since April. So that's definitely different than what we've seen before. Even last time when we had that big drop, the almost like 5 ATR drop, including overnight, we still held that daily 48 level and this key pivot around 65.50. So even if we get that, what that should be to you, if you're properly sized and you're properly risking against the market, is just a signal. It's just saying things are different and we need to reevaluate and we need to look at different opportunities. This is where you can start to see that there are potentially signs of things changing. And that's all it is. And that's really important to have that context and that big picture understanding. And that's the reason why I wanted to kind of talk about this chart, is because, we can say buy the dip and eventually we're going to be wrong. And that's okay. That's a market signal. That's a signal to you. And then we can look and see, if things start to fail in the short term, in the daily chart, right? Then we're looking at weekly and monthly charts, and we'll talk a little bit about that in a second. So that's what I wanted to do. I just wanted to zoom out and talk a little bit about this because this is how we got here, right? These dips, some of which people were calling for the end of the world, including last week, have been bought, right? And it doesn't mean we're going to get continuation this next time, right? That's not guaranteed. Nothing's guaranteed in the market. But we've seen that that's been the case in a strong market, and until we start to see things changing, and perhaps they are, there's no point in believing that anything's going to be different until it proves that it's going to be different. With that, let's dig into the next chart we have here. So this is a annotated daily chart. I'm just zooming in a little bit here just so we can talk a little bit more about it. Some important levels to note. We talked about this zone here, this 6,600, 65.50 key demand. We didn't even test it last week. That's really critical. Like, we really need to hold that. If we don't hold that, then, I'm expecting us to go down to the weekly 21, monthly 8. And that's currently around 6,500. It's obviously rising. So, that's important. That's a critical level to hold. And 66.50, which we'll talk about in the hourly chart, was a key level to hold last week. Do have this quarterly Golden Gate open still. This is the 700 calls for January play that some of us are taking, if you are following me on community posts, Twitter, or of course in the Discord. So we'll see if we get continuation. But in order to get continuation, there's a number of things that we really need to do. First and foremost, that's not a good sign, right? We don't want to see daily 21 resistance. But it's not the end of the world, right? So right now we're daily 21 resistance and we're quarterly pivot support, right? That's kind of like the two key levels that we're looking for. And, just like this, we rejected the daily 21, came back over it, lost it again, and then finally recovered and stayed above it, right? So we can get something similar to that. It can be, a little bit less clear as to kind of the direction of this initially. And then when we start to hold it on a multiple day basis, then it might give us a stronger feeling that things are going to go higher. Ideally, we're looking for a recovery of that quarterly long trigger, which is at 66.20, and even more so the monthly pivot, which is 66.40. That would really give us some confidence for the upside. And for the downside, if we lose this quarterly pivot on a daily closing basis, we've now tested it twice and it's held twice. If we lose that on a daily closing basis, that would start to show that maybe there's some cracks here. And particularly if we lose that now, it would be below the daily 48, and that would be the first daily 48 closing that we've had below it. So that's what I'm kind of looking at in the big picture. Right now, we're just kind of sideways and trying to figure things out. And because of that, we have now gotten back into compression. And that means a big move is coming. Last time we were in compression, we had a pretty decent sized move. And every time that we've been in compression on the daily, we've had some really nice moves. All right, let's get tactical. So here's the hourly chart. Last week, we were looking for, this hourly 1348 crossover and continuation above the monthly pivot. We got over the monthly pivot and we got over the daily 21, and then we promptly lost it. And we even lost the hourly 21 and went down to test this 66.50 key support. We talked about it last week that this swing Golden Gate might finish first, it might close first before we get a bigger bounce to the upside. And that is still a possibility for this week. I would watch this 66.50 area. I think it's an important support level. We bounced off of it twice. But 66.22 is not that much further below it. So, we could always get this situation where we dip below the 66.50 key support, recover it, and then continue higher. And then, of course, if we start to break down 66.30 and then the quarterly pivot, then we would look for more continuation downside all the way to the monthly -1 ATR, which is roughly around that weekly 21 and monthly 8. So that's what I'm looking for into this week. We really need to get back above this hourly ribbon, and we need to make, flip it and then continue higher above these key levels for us to see continuation and for that, move to 7,000. And that's your weekly pivot for November 16th, 2025. I'll see you in the next one.